Couple rules of thumb. Now, you want to negotiate for terms, not so much for price. Now, let me just say this too. Don't overpay. A lot of people, if you see properties being marketed as owner will carry, lease with option to buy, they are jacking up the price, trying to get an artificially inflated price, right? Because they know it's not worth it, so they're gonna do this technique. So you don't want to overpay. However, it's very, very difficult to beat them up on price and then try to come in and get them to carry financing, right? Get a fair and reasonable price and then get some great financing terms that are gonna work, right? That is the recommendation here. Now, you wanna make sure also that the property cash flows, considering the seller financing, because if the seller carries financing, there's typically some kind of an interest rate there. So, meaning you gotta pay it. Not all the time, depending, like I gave y'all an example of how we negotiated. But you still gotta make sure you pay the first mortgage. If there's a second mortgage, you pay that. You gotta make sure it cash flows. If you're buying a property that maybe is a rehab and there's a period of negative cash flow, understandable. But don't necessarily buy properties that are eating you long term. You know, you don't have to break the bank on the cash flow. You just gotta make sure there's a cushion. The bank's gonna underwrite you to make sure there's a cushion. They're gonna give you that debt coverage ratio. You gotta underwrite though, because you might do a deal when there ain't no bank involved. All right, well, who's the regulator of the cash flow? You. And if it's brokers, we are for our clients. You know what I mean? So that's very, very important. Rule of thumb. And then make sure all the necessary documents get properly recorded. Properly, this is very important, right? I'll give you an example. My mom bought her property in our house, one of the houses. I was older. I grew up, but I was in high school when she bought this house. She bought a house in Brookfield. He sold for $43,000, right? Carry financing. She put $2,000 down. The lady owned it free and clear, carried financing. Mom did a great job. It was the termites was holding the property up like this. You know what I mean? She came in, cut the bushes down, fixed it up. It was a beat up house. We moved in. We was eating off a hot plate. We didn't have an oven for a minute. All these types of things, right? Real sweat equity. Went through a divorce with my stepfather. A few years down the line, come time for me to sell the property. They bought it $43,000, right? They actually refinanced a couple years later, put a $100,000 loan first position. And then a couple years later, time to sell the property. I put the property in the market, $325, this is 2005, got it, sold. Got it in contract. Sold is when it closes, y'all. If y'all watch the real estate commercials, real estate shows, that is just because somebody goes in a contract, goes into escrow, and it's not sold. It's sold when the deed transfers and the deal is recorded. Because if you're in the business, holler if you hear me, how many deals went into escrow and then didn't close, right? You know what I mean? And that's a part of life, part of business, you know? We get to the closing table. We open up escrow. We get to the closing table. We started the process. Everything was fine. Property's in my mama's name, looking good, right? Divorce court, you know, everything's going through court and it's divorce. Beautiful process, by the way. You know, we get to the closing table, right? Call the title company, call me, oh, Steve, we got a problem. So I was like, listen, I'm not trying to talk about no problems. I've already spent this money. You know, talk about problems. There's a cloud on title. It looks like your mom doesn't actually own the property. Oh, and we're at the closing. Buyer's loan docs are in. The buyers got their loan document. They signed their loan documents. We supposed to be signing. And they hit me with this. And they're talking about somehow the deed, when she bought the property, the seller finance deed didn't get properly recorded. They didn't have title insurance, right? And now remember, this is 2005, so it was all kind of scams. It was all kind of title companies. They used to buy us tickets to the Warriors games after closings, bottles, and it was a little bit of a different time in those days. You know what I mean? So it was the Wild West. So somehow somebody fumbled the ball. But I asked them, I said, wait a minute, my mom refinanced a couple years ago, put out $100,000, been making a mortgage payment. I'm sure this mortgage company did their due diligence and research. There was a title insurance policy on the property, wasn't there? Well, the lady told me, well, actually, no. Whoever did the loan was kind of a shady outfit, and they did not. Now, interesting, usually the lender requires title insurance, right? Lenders will require that. They didn't get title insurance, and somehow they missed this clown on title too. So long story short, by the grace of God, I had to hit some backflips and walk some tightropes, but I found the woman who sold my mama house. Luckily, she was living off 105th, and that was great because we was right off 98th. And we went over there, sat down with her, and wouldn't you know, she was a godly woman, and she was an honorable woman, and she didn't say, well, I'm gonna need an extra 100,000 or 10,000. She signed, and we closed. But I was 20-something years old, and I'm sitting there having heart rhythms, and you know what I mean, all of this type of stuff. Because the document wasn't properly recorded. You know, my mom and they was going off. Hold up that thing you got right there. That one right there in your hand. They was going off this right here. The Carlton sheets, no money down. That is, let me just tell you, that is, in my opinion, the #1 real estate course in the history of real estate courses of all history of real estate. No money down, great course. Oh, it's a great one. Yeah, you know what I mean? That's how I got my start in real estate. They bought this property off of that using those forms, but you know, we in Alameda County, and they a little special up in here. So when they went to go record, they got the right forms. My stepfather was a paralegal. He went their forms, but the county, they were special sometimes. They didn't record it properly. Had they spent $600 and went down over public title, and y'all record this for us because y'all professional, they would have got that done. If they paid $800 that time, they would have got a title insurance policy, which is what you should do if you're going to do one of these kind of deals. Does that make sense? So learn from this wisdom and that stress. So these are just some basic rules of thumb. Now we're going to get into the nitty gritty. All right, yep, and I'm okay, making some time. Now these are the stress. So does that before now? Because now it's about to go fast, and now we're about to talk strategies, tactics, how this stuff gets done. But